Hey everyone, welcome back to Corporate Decoder, the place where we break down the financial jargon and legal speak to give you the real story behind the corporate world. Today we're diving into an interesting S-4 filing from Skyworks Solutions Incorporated, and Qorvo incorporated a report that reads like a chapter from a business textbook but with some seriously high stakes for anyone involved. Stick around because we're going to decode this deal and figure out what is really going on behind all those fancy legal and financial terms. And hey, if you are serious about understanding corporate moves, make sure you subscribe to us as we unpack these filings regularly. We also have a growing community on Discord to continue these conversations, so check that link in the description. Alright, so what are we looking at here? It is an amendment to a registration statement, a Form S-4, basically a document filed with the Securities and Exchange Commission, or SEC, that companies use when they're trying to get approval to sell their stock. This particular one is for a big deal Skyworks Solutions Incorporated is planning to merge with Qorvo Incorporated. Think of it as a formal announcement laying out the plan for combining two major companies in the semiconductor industry. The main point is that Skyworks and Qorvo are planning to combine. They've signed a merger agreement and they need their stockholders, the people who own shares in these companies, to vote yes on the deal. This report is essentially a giant information packet, a joint proxy statement, and prospectus designed to get both sets of stockholders to understand the deal and vote in favor of it. If the stockholders of either company say no, the deal is off. So what does this merger mean for the folks who own Qorvo stock if the deal goes through? They're going to get a mix of Skyworks stock and cash for each share of Qorvo they own. Specifically, they'll get 0.960 shares of Skyworks common stock along with 32.50 in cash. It is a fixed exchange ratio, meaning it won't change even if Skyworks' stock price goes up or down. The actual value they receive, though, will definitely change as the market value of Skyworks' stock fluctuates. Let's look at the value on the 27th of October. The day they signed the deal, the implied value for each Qorvo share was about 105.31. Fast forward to December 2025, the last practical day before this filing, and that value had dropped to 96.22. This highlights the risk for Qorvo shareholders. The amount of Skyworks stock they get is fixed, but its value can swing with the market. Both companies are holding special meetings for their stockholders to vote. Skyworks stockholders need to approve the issuance of Skyworks stock for the deal. Qorvo stockholders need to approve the merger agreement itself. Both boards are unanimously recommending a yes vote. Now for the cautionary part, and we have to pay attention to this section, it is all the things that could go wrong. The filing lists a whole lot of risks related to this merger. For starters, the deal might not even happen. There are conditions like getting regulatory approvals, which can be a tricky hurdle. They need clearance from antitrust authorities and other government bodies. Imagine the worst case scenario: regulators block the deal, and Skyworks has to pay Qorvo a hefty breakup fee of nearly $300 million, or Qorvo has to pay Skyworks a similar fee. That would sting. Here is where things get really interesting: the unaudited pro forma condensed combined financial information. This is like a simulated financial report showing what Skyworks and Qorvo would look like financially if they were already merged. It is a crucial part of the filing where we can see the potential impact of this combination. Let's decode a few key numbers. Total pro forma revenue for the year ended the 3rd of October 2025 is projected to be $7.75 billion. That is a combination of Skyworks' $4.087 billion and Qorvo's $3.663 billion. That is a substantial revenue base for the combined entity. Cost of goods sold is projected at $4.916 billion. This shows the direct costs of producing the goods. Gross profit, which is revenue minus cost of goods sold, is projected at $2.834 billion. This tells us how much is left after covering production costs before other expenses. It is a key indicator of profitability on their core business. Now look here, goodwill. The estimated value of goodwill is a whopping $6.47 billion. This number often reflects the premium paid over the fair value of the acquired company's identifiable net assets, often representing things like brand reputation, customer relationships, and expected synergies. A large goodwill number can sometimes signal that the acquiring company expects significant future growth and integration benefits. For Qorvo stockholders who will become Skyworks stockholders after the merger, it is important to know that their rights will be governed by Skyworks' charter and bylaws. The filing outlines some differences in these rights. For example, Skyworks has a provision that can increase the voting power required to change certain charter documents to 80 or even 90%. This acts as an anti-takeover measure, making it harder for hostile bidders to gain control. Skyworks' board is pushing this deal hard. They believe the combined company will be a leader in the semiconductor world. They're talking about complementary products expanding market reach and achieving around $500 million in annual cost synergies. That means they expect to save at least $500 million a year by combining operations. That is a big chunk of change. They also expect the deal to boost their earnings per S-share right from the start. Qorvo's board is also on board, primarily citing the substantial premium offered above their stock price before the deal was announced. They also highlight that Qorvo stockholders will own a significant 37% of the combined company. That means they still get a say in the future. Plus, the mixed cash and stock deal offers shareholders some liquidity and a stake in the combined entity's growth. Investment banks Catalyst Partners and Goldman Sachs have weighed in with their opinions. Both concur that the deal is fair from a financial point of view to Skyworks. However, these opinions are based on projections and assumptions which, as we know, can be optimistic. The numbers used in their analysis are forward looking, and not a guarantee of future results. Centerview Partners LLC, Qorvo's advisor, also agrees the deal is financially fair to Qorvo stockholders. Their analysis uses various metrics like enterprise value to EBITDA ratios and discounted cash flow models. They compared Qorvo to similar companies like Cirrus Logic and Qualcomm to arrive at their valuation. Let's revisit the risks, because this is vital. Integration is never easy. The filing warns that Skyworks and Qorvo might not be able to successfully combine their businesses. That means the expected cost savings and growth might not materialize. There is also the risk of losing key management personnel and other employees who might jump ship due to the uncertainty. Diverting management's attention to the merger rather than running the day-to-day operations is another major concern. Digging into the merger agreement itself, we see strict rules about what Qorvo and Skyworks can and cannot do during this waiting period. They are largely prohibited from soliciting competing offers, which limits their options and makes it a tough pill to swallow if a better deal comes along. They have certain rights to consider superior proposals, but there are fees involved. To fund this massive deal, Skyworks has secured a $3.05 billion bridge loan facility from Goldman Sachs Bank USA. This is essentially a short-term loan that will be used to cover the cash portion of the merger consideration and other transaction costs. It is a significant amount of debt, and it is worth noting that Skyworks' obligation to close the merger is not dependent on securing this financing. So what is the verdict? This is a massive undertaking combining two significant players in a competitive market. The potential financial synergies are huge, but the risks of integration failure, regulatory hurdles, and market fluctuations are equally substantial. The fixed exchange ratio for Qorvo shareholders adds a layer of uncertainty regarding the ultimate value they will receive. It is a high stakes gamble on future growth and integration success. What is your take on this merger? Will Skyworks and Qorvo create a semiconductor titan? Or will integration challenges sink the deal? Let me know your thoughts in the comments below. If you found this breakdown helpful, please hit that like button and subscribe for more deep dives into the corporate world. And don't forget to join our Discord community, linked in the description, to continue the conversation. Thanks for watching. See you next time.